Hello everyone, welcome to my channel. Let's say there are two friends, Jack and Jim. Both are decided to start a business that sells coffee and decided the percentage of ownership means how much amount will each partner invest for startup cost or equipment. Profit and loss division means how much profit and loss will each partner get to take. What will be the duration of the partnership? Will this partnership continue on forever or will it end at a certain period? If any case arises in the future, which has the ultimate authority to bind the company in case of debts and liabilities? In case of death or withdrawal of a person, what are the terms and conditions in case if any person either dies or leave the company? In this case, first we understand both friends are going to start a business that is a partnership business. So before going to start a business, they impose certain terms and conditions in the purpose of partnership to provide the clear understanding, to clear the role of each partner, which ensure the smooth running of operation of the firm. In a way, there is an agreement between both. So that agreement we will make in the term of business is called partnership deed. So today in this video we will discuss the topic partnership deed. In this topic we will discuss the meaning of partnership deed, the contents of the partnership deed, and the factor affecting accounting treatment in the absence of the partnership deed. Let's get started. The meaning of partnership deed. Partnership deed is a legal agreement when two or more people come together to run a business. This document contains all the essential terms and conditions that needs to be followed by each and every partners to ensure the smooth running of the operation of the firm. In simple, we can say partnership deed is an agreement. It may be oral and written, and it is assumed to be partnership deed should be in writing because if any disputes arising among the partners, it helps to avoid any misunderstanding and settle the dispute between the partners because all the terms and conditions of the partnership business have been laid down beforehand in the deed, and it can be used as an evidence in the future. So, partnership deed is an important legal document which defines the relationship among the partners. And it is not essential to have a written partnership deed. An oral agreement is enough among partners to form a partnership firm, but it is advisable to have a written agreement to avoid future disputes among the partners. Hence, partnership comes into existence by an oral or written agreement, and it is better to have written agreement to avoid any disputes. Document known as partnership deed, and it contains the details of terms and condition of the partnership, and it is a legal document signed by all the partners. The next is contents of the partnership deed. Here are some clauses in the partnership deed which help us to understand what is writing in the partnership deed. First one is the description of the partners. Name and description in which partners' background with their experience in academic and professional and addresses of the partner will be mentioned in the partnership deed. Second is description of the firm. Name and address of the firm is mentioned in the partnership deed. Name and address of the firm, under what name they are registering and starting their business and firm. If there is any other branch of that business, those name and address will be mentioned in the partnership deed. Third is principal place of business. Address of the principal place of business means where are they establishing their firms and business. Next is nature of business. Nature of business that the firm shall carry on. What type of business are they starting? in the form of general partnership, limited partnership, or limited liability partnership, or limited liability limited partnership. There are some nature of the business, there are some kind of partnership business, and what kind of business they are going to start. All are mentioned in the partnership deed. Next is commencement of the partnership deed. Means so when the partnership was started, and the date has to be mentioned in the partnership deed. Sixth is capital contribution, the amount of capital to be contributed by each partner, whether the capital account shall be fixed or fluctuating. There are two capital accounts in the partnership, that is fixed capital account and fluctuating capital account. And the capital contribution means percentage of ownership, means how much money will each partner invest for startup cost and equipment. Sixth is interest on capital. Rate of interest, if allowed on the capital, is also mentioned in the partnership deed. Interest on capital means it is the amount and is the interest paid to the owner for providing a firm with the required capital so start a business. If it is mentioned in the partnership deed, then it is allowed to the partner. Next is the interest on drawing. Rate of interest, if to be charged on drawing, that has to be mentioned in the partnership deed. Interest on drawing is an income for the firm and is payable by partner to the firm. Hence, it is a debited or deducted. Interest is charged on money or goods taken by partner for their personal use during the year. Profit sharing ratio. This is a ratio in which profit or losses are to be shared by the partners. In the agreement between among the partners must be to share profit and losses of the business, and it is not essential that all the partners must share losses. Next is interest on loan. The rate of interest on loan by partner to a firm. If any partner has given loan or advances to the firm, he or she shall get interest at the agreed rate as written in the partnership deed or as agreed otherwise. Remuneration to the partners, amount of salary, commission, any fees, etc. if agreed to be paid for taking part in the conduct of the business of the firm. Valuation of assets, the manner in which assets of the firm shall be valued in the case of its reconstitution. Next is the settlement of account. In this, the manner in which accounts of the partners shall be settled in case of his or their retirement or death or at the time of dissolution of the firm. Next is accounting period. Accounting period is basically of 12 months, and that is 1 year. That starts from 1st April to 31st March every year. At the end of the accounting year, the companies will prepare the final accounts of the companies, and the date on which accounts shall be closed every year. Normally, accounts are closed on 31st March every year because every entity must submit the return of income on 31st March every year. Next is rights and duties of the partners. The rights and duties of the partners are defined. What are their rights and duties properly mentioned in the partnership deed. Next is the duration of partnership deed. The partnership deed, whether it is for a specified period or for a venture or at a will, and what will be a partnership duration. Will this agreement continue on forever or will it end at a certain period? Next is bank account operation. There will be one bank account for this firm. So if there are any rules regarding the operations of the bank account, they have to be clearly mentioned in the partnership deed. Like how shall the bank account be operated, whether it shall be operated by any of the partner or jointly, has to be mentioned in the partnership deed. Next, death of a partner. In case when a partner either dies or leave the company, what are the terms and conditions? All the terms and conditions are mentioned in the partnership deed. Last is the settlement of disputes. If any disputes arising among the partners, it also helps to avoid any misunderstandings and settle possible disputes between partners, because all the terms and conditions of the partnership business have been laid down beforehand in the partnership deed, and it can be used as an evidence in future. So here are some contents and clauses of the partnership deed. Next is the provisions affecting accounting treatment in the absence of partnership deed. There are some provisions has need to be followed by all the Indian partnership firms according to the Indian Partnership Act 1932. There are some provisions are applicable according to the Indian Partnership Act 1932 in the absence of the partnership deed or where it is silent, means that is it does not have a clause in respect of the following manner. First one is the sharing of profit and loss. If the partnership deed is silent about the profit sharing ratio, the profit and losses of the firms are to be shared equally in partners, irrespective of the capital contributed by the partners. Suppose Jack and Alex are partners in a firm with capital contribution of rupees 3 lakh and rupees 5 lakh respectively. Alex wants to share the profit in the ratio of capital contribution. According to capital contribution, Alex should get more profit as he contributed more capital. But when there is no partnership, there is nothing mentioned in the partnership about the profit sharing ratio. The profit and loss needs to be shared equally, irrespective of the capital contribution by the partners. Means if partnership deed is silent, means there is nothing mentioned in the partnership deed about the profit and loss sharing, then the profit and loss are shared equally by the partners. Next is interest on capital. Interest on capital is the interest paid to the owner for providing a firm with the required capital to start a business. In case of silent partnership deed, interest on capital should not be given to the partner of the firm. In case the partner mutually agreed to provide interest on capital out of their profits, then it can be given at an agreed rate. Suppose there are three friends, A, B, and C are partners in a partnership business, and they decided that interest on capital will be provided to each partner at rate 5% per annum. But according to the provision or according to the partnership deed, if there is no partnership deed, there is no interest on capital is to be provided or allowed to any partner, but it will be charged if it is mentioned in the partnership deed and only when all the partners agree to it. Means hence the partner is not entitled to claim any interest on amount of capital contributed by him if partnership deed is silent about this. Third is interest on drawings. When any partner withdraw an amount in cash or in any other form from the firm for personal, then it is known as a drawings. The interest on drawing is charged by the firm on that drawings. There are various methods to calculate interest on drawings. However, the method to calculate interest on drawings depend on the information given for the time and frequency of the drawings made by the partners. If there is not mention in the partnership deed regarding the interest on drawing, there then no interest should be charged from the partners on the amount withdrawn by them. Let's see the example. A, B, C are partners in a firm. A has drawn rupees 10,000 from the firm for personal use. B and C demands that interest should be charged at rate 10%, but according to the partnership deed, interest on drawing is charged from the partners if any partners withdraws some amount from the business. In case of partnership deed is silent, interest on drawing is not charged from the partners. Fourth is interest on advances or loan by a partner. If a partner has given or advanced any money to the firm in addition to the capital for the purpose of the business, he shall be entitled to get an interest on the advance or loan. But if there is not mention in the partnership deed regarding interest on partner's loan, According to the Partnership Act 1932, the partners will get interest on loan at rate 6% per annum on the amount of loan provided by them to the firm, even if there are losses to the firm. Suppose A, B, and C are partners in a firm. C advanced a loan of rupees 50,000 to the firm and demands interest on loan should be charged at the market rate of interest, which is 12% per annum. But according to the partnership deed, there is not interest on loan to be charged on demanded by the partner. The firm is only liable to pay the interest on loan at rate 6% per annum to a partner if the partnership deed is silent. Hence, interest on loan by partner is charged against profit. It means interest is paid whether the firm earns profit or the interest on loan by partner is allowed only at rate 6% per annum according to the Partnership Act. Fifth is remuneration to partners. No partner is liable to get any salary, commission, fees, etc. for taking active part in day-to-day business affairs or activities. In the absence of the partnership deed, then no salary should be provided to partners. Suppose Anita is a partner. She claimed that since she managed the business and she should get a monthly salary of rupees 10,000. But according to the absence of partnership deed, Anita is not liable to get salary because if there is no partnership deed, no partner can get any salary, any commission or fees for the services rendered or for taking part in the operation of the business. Hence, in the case of silent partnership deed, no remuneration is paid to any partners. Last and sixth point is admission of partner. A business firm seeks new partners with business expansion being one of the driving motive. As per the Partnership Act 1932, a new partner can be admitted into the firm with the consent of all the existing partners unless otherwise agreed upon, and if partnership deed is silent, new partner cannot be admitted or entered unless all the partners agree to it. Suppose Charu and Amit are partner in a firm. Amit wants to introduce his son Deepak as a partner and Charu object to his proposal. A partner cannot be introduced or admitted as partner with the consent of all the partners. Therefore, Deepak cannot be admitted into the partnership. But if partnership deed is silent, Deepak is Deepak cannot be admitted into the partnership deed because Charu objects to it. Means all the partners are not agreed to it. If Charu is ready, means both the partners are ready. Charu and Amit both are ready to get admitted a new partner. Then the Deepak admitted as a new partner. But if there is not mentioned in the partnership deed and all the partners are not ready to get admitted a new partner, then new partner cannot be admitted unless all the partners agree to it. So here are some rules applicable in the absence of the partnership deed.